A conversation that I sometimes have to have with clients is explaining to them what the IRS underpayment tax penalty really is. And these could be clients that are coming to me for the first time or individuals that we've been working with for quite some time, but they don't necessarily pay their estimated quarterly taxes on time. Now, that's very important. This is what I want to talk about. If you are a business owner or a high wage individual with other sources of income coming in, dividends, capital gains, etc., your income is going to fluctuate throughout the year, and it may not be withheld properly through your job or your W-2. What you have to do in that case is remit a check to the government every single quarter, April, June, September, and January, or December, depending on whether we want to include that payment on the state tax side in December or not for the year, whole different story. But this is what you have to do on an annual and quarterly basis. And if it fluctuates significantly, you can't just use what's called safe harbor estimated tax payments, which is based on the prior year. So what you should do is calculate every single quarter what your income is going to be and cut a check to the government in what you think, with your best estimate, is going to be your tax liability. And if you don't do that and you come in significantly under withheld or underpaid, you will be assessed an estimated tax penalty, which is essentially interest, for not paying your taxes on time. There are ways to avoid it, and it would make sense to stay on top of it because one, nobody wants to pay penalties, and two, nobody likes surprises at the end of the year, especially when you have to cut a check to the government. So you have to make a decision whether there is an opportunity cost here for you, meaning can you make more money investing this cash as opposed to giving it to the government, or actually just paying penalty at the end of the year, because that just may make more sense. So there are a lot of factors to come into play, and you should be speaking to your tax advisor on a regular basis to see whether it makes sense to calculate them on a regular basis, pay the safe harbor, or just let the W-2 withholdings account for whatever you're paying and then pay in the rest at the end of the year. It's all individualistic. You have to see what makes sense for you to keep more money in your pocket and grow your wealth. Thanks so much for watching. Like and follow for more. And if you have any questions, comment, and we'll address those on the next video.